In this market, you'll see risk off on Tesla, but I don't believe we sit here 6-12 months from now, it's the same narrative. As we ultimately see a sub $30,000 vehicle, FSD autonomous, and the rest, ultimately what I view as the story comes to fruit.
12 months.
12, look, I think we are definitely right now going through a very, very difficult period as a Tesla holder. I mean, it's so much easier to just own the godfather of AI, Jensen, NVIDIA, Microsoft, what I view Amazon, a handful of others. But for Tesla, I think we get onto the other side of this. That said, it's definitely, sort of put the seatbelt on time as we see in terms of the stock.
Dan Ives just told everyone to buy Tesla shares. If you're currently distracted by the recent noise in the stock market or by Tesla's plunge in stock price, then you might be sleeping on a golden opportunity. Tesla stock will make investors millionaires in the near future, and Dan Ives just confirmed it.
I don't believe the growth story is dead. I just believe we are going through a very brutal transition period to get onto the other side. And for Tesla, it's, do you squeeze competition, continue to cut prices, or do you basically hold serve?
But it comes at a time when Tesla was just about getting it right on the profitability front, right? So how long does this transition period last, and how much does it test patience for Tesla and Tesla's shareholders who've been wanting it to be more in the black on the bottom line?
Well, the biggest issue is that those conference calls, they've almost been Saturday Night Live comedy shows. I mean, because without a CFO, Zach, since he left in August, every time you want to get guidance, you want communication, you don't get it. So the problem now is that I think about 80% of the sell-off has been communication, 20% is the actual fundamentals. And investors in this market, you'll see risk off on Tesla, but I don't believe we sit here 6-12 months from now, it's the same narrative. As we ultimately see a sub $30,000 vehicle, FSD autonomous, and the rest, ultimately what I view as the story comes to fruit.
12 months.
12, look, I think we are definitely right now going through a very, very difficult period as a Tesla holder. I mean, it's so much easier to just own the godfather of AI, Jensen, NVIDIA, Microsoft, what I view Amazon, a handful of others. But for Tesla, I think we get onto the other side of this. That said, it's definitely, sort of put the seatbelt on time as we see in terms of the stock.
You mentioned, and I'm not trying to champion Tesla here, but you mentioned, it's almost like SNL when it comes to Elon Musk. And I know he's no Sydney Sweeney, but in terms of being able to give guidance, considering what's happening right now, isn't that really tricky for them to do? Because we're seeing day in, day out price cuts and, expectations getting absolutely slashed. So how can they realistically be able to deliver anything of the next 6 months, let alone the next 12 months?
But give some goalposts. Give a worst case.
But then he gets accused of doing it again and over-promising and under-delivering.
But the problem is that by no goalposts, no communication, bad news in terms of come out of the China numbers, investors basically put on the blindfold, play darts. That's where the model is going to be. And that's not good for the stock. And it comes down to, investors understand Musk goes to the beat of a different drum. No one could argue with his success. But
Dan Ives has always emphasized the massive potential of Tesla stock, especially around its interesting price targets and predictions. And this time he's got some pretty crazy things to say. Tesla stock has been a bit of a roller coaster recently, and there's been a lot of things going on. But according to Dan Ives, the automaker is definitely going through a period of transition that will inevitably take it to its true valuation. In fact, he thinks that Tesla will be unrecognizable in just 6 months from now. But how is that going to happen? And why is Dan Ives so bullish? Let's find out.
Look like on the other side, the Delaware situation, the 25% ownership, in terms of some of the noise there, that's just added to the agita that we've seen in the stock.
But how much is this a Tesla story versus how much of this is the EV transition theme losing steam?
Look, EV, it's been dark days. I mean, we see it globally, right? Even you look at GM, Ford, they're taking a step back, hybrid. You're starting to see, okay, so now do we go to 60% penetration? It's probably closer to 30%. But still, that's a massive growth opportunity over the coming years. But from an EV perspective, it has been a very difficult time for the players and for investors, also in a market that's bifurcated. So in other words, like, do you want to be owning the minivan right lane with the paint job going 40 miles an hour, or the Bugatti in the left lane that you'll pay up for, which is essentially AI? So that's the problem right now in this market.
Can I just really quickly ask you, probably no other company in the S&P or even in the Mag 7 will be more impacted by the prospect of a Trump presidency. Do you foresee that if Trump was to win, that it's boom time for Tesla, because all of the malignment they've been receiving from the Biden administration would practically disappear in a day?
Yeah, I mean, the elections, like obviously if Trump won, there'd be benefit. But then I'd argue on the other side, in terms of China tensions, that would be more negative, and that would actually hurt Tesla, just given that's such an important end market for them and Apple. And I think there's definitely, across Asia, in terms of my travels, a lot of questions on the elections, EVs. And look, essentially it went from a Cinderella story to a horror show, but it's probably somewhere in between. I do believe the way to play it, it's BYD and Tesla in terms of who's going to emerge as a winner.
As long as there's a happy ending, if there is one.
Look, I mean, we've been here before in terms of going through, in terms of going through these types of situations, you ultimately have to, betting against been the wrong move.
Tesla's been a wild ride, from groundbreaking innovations to Musk's sometimes unpredictable announcements and a rollercoaster of stock prices. There is so much going on for the car company. However, lately there's buzz in the air that Tesla might be shifting gears. And according to Dan Ives, who is a Tesla bull and stock expert, Tesla could be at the cusp of reaching its true potential. Hey guys, welcome back to Tesla Tomorrow. Tesla's ongoing research and development efforts, especially around autonomous driving technology, could potentially disrupt the transportation industry. And as the automaker makes strides in autonomous driving and self-driving capabilities, it's got the potential to unlock new revenue streams and revolutionize the way we think about transportation. Additionally, Tesla's strong cash position and positive free cash flow provide it with the resources needed for future expansion, R&D, and strategic acquisitions, and that's something most people don't understand. Dan Ives' bullishness on his price target for Tesla isn't just a speculation, but it's a proof about Tesla's ever-growing potential, which is why the analyst has studied the company for years, and he's also been looking at it for a long time. Before we carry on though, if you're liking this type of content, hit that like button, subscribe, and turn on post notifications to keep up to date on everything going on with Tesla. To understand why Dan Ives just made this prediction, let's take a moment to consider their history of Tesla. Now, Dan Ives once said he believes Tesla has a huge opportunity to dominate the electric car market, and he expects it's going to grow to almost 25% by 2025. And he also thinks that Tesla's got a strong advantage in terms of battery technology, software, and autonomous driving, enabling it to maintain its leadership position and fend off rivals. In a previous interview on CNBC, the stock expert talks about his bullishness position on Tesla. Not just that he sees the automaker as a disruptive technology company, but as one that is changing the industry and creating a loyal fanbase. He's also not too worried about the supply chain woes that Tesla is facing, as he believes that the car company will one day be able to overcome them and deliver strong results quarter to quarter.
But for Tesla, it's all they're playing with, right? And the underlying story for Tesla has been about incredible rapid growth over the last few years. And now Elon and team are suggesting that's going to be much slower this year. And all of these signs in the last few weeks and months are really kind of making it even more worrisome just how slow that growth is going to be. One of the remarkable things about Tesla is if you look over the last 3 years, for example, the first quarter has shown growth that's been better than the fourth quarter, which is really rather remarkable if you think about it, because who wants to go buy a new car in winter and kick the tires, right? But that just kind of underscores how much growth there's been there. And now there's real concern that maybe this quarter won't be as good as last quarter. And that's worrisome to some people.
Do you think eventually that some of the mandates that we've had from the Biden administration, do they get pushed back? And does that matter to Tesla? Is Tesla dependent on I mean, I know that certainly subsidies help, but on the mandates to get to a certain place by 2030, if that gets pushed back, would that hurt Tesla?
Well, the tax breaks that have been passed certainly help make these cars more affordable for Tesla. Now we've seen them expanded, so Tesla has them again. Without a doubt, that helps as Elon fights to get every penny of cost as he can out of those vehicles. But he has argued in the past that he's not dependent upon these sorts of things, that his goal at Tesla is to make a vehicle that is cooler, is better than a gas car, and that will be what appeals to people and drives kind of that EV transition. And in a lot of ways, that has been true for Tesla. It's the other competitors who really seem to be struggling to make an offering that can compete with Tesla. People want a Tesla, maybe they don't necessarily want an EV.
There are a few reasons why Tesla could be having a positive transition. First up, gigafactories are cranking out vehicles at a rapid rate. Remember those long wait times for a Model S? Those days are beyond us. What this means is that we'll soon get to see more people on the road in Teslas, translating to a bigger impact on emissions. And then there's self-driving. Let's be honest, full self-driving is a bit of a misnomer. But here's the thing. Tesla is constantly gathering data from its massive fleet, and this real-world information is invaluable to training its self-driving algorithms. While the timeline might be a moving target, the progress is undeniable, and if Tesla is able to crack the code on self-driving tech, then the automaker could ferry us to a point where cars can truly and efficiently drive themselves. Full self-driving is another major contributor to the company's growth and profitability, and will drive the automaker's total addressable market upwards. Already, Tesla's effort to refine the suite of performance through neural network training has contributed to over 150 million miles of data, and we expect it will continue to do so.
And AI have been the dominant forces, as well as balance sheets in tech. Now put those three together, and let's just put Apple aside for a moment. Cloud and AI, how do I disaggregate who's going to perform well in this? What's going to make a cloud A grade and an AI A grade stock?
Yeah, and I think you hit on what's really a key point. If you look at what's happened with Nadella and Redmond at the top of that mountain from a cloud perspective, now this is more monetization for the hyperscale players, from Microsoft, for Amazon, for Google. We believe for every $100 of cloud spend the last 4 or 5 years, there's 35 to 40 incremental AI spend. That's why I'd say when you look at Microsoft, you look at Google, this is going to be just a new frontier of growth. And then, of course, you have the godfather of AI, Jensen and NVIDIA. This is really just starting what we view as a 1995 moment.
The godfather of AI.
Look, Jensen's
top
the
performing
godfather.
stock in the S&P 500.
There you go.
But it's the biggest tech transformation in 30 years, haven't seen since 1995, start of the internet, and we believe this is actually the beginning of the next phase of this bull market.
I just want to know, are there a million AI ETFs that have all of a sudden come on?
You know,
watch that market, so...
there's a few dozen that were launched way before we started talking about AI around this time last year. But I do want to switch gears here and talk about EV demand, because this has been one of the stories that's really emerged. That it just feels like all of these automakers really miscalculated how much demand there would be for EVs. And now you're seeing those production targets get cut. How does that factor into how you're thinking about Tesla? Is that a bear case for Tesla, or does Tesla just command more of maybe a shrinking pie?
Yeah, Katie, I think that's a great point. Look, right now it's Tesla's world, everyone else paying rent.
A lot of why people are sleeping on the massiveness of Tesla's AI is a bit of a crazy thing too. And there are several reasons why it could be risky. Think about Dojo, for example. The deployment of Dojo and the training of Tesla models are crucial positions for the automaker's efforts to deploy advanced AI to consumer products. It's a pretty important thing to think about, especially with solutions like autopilot and full self-driving, which are designed to replace humans, and Optimus, which will perform tasks that are boring, repetitive, and dangerous. From Tesla's previous updates, it expected that Dojo will power the future generations of Tesla products. Even from its initial announcement, several Tesla investors expect to see further information on this microchip, as well as practical applications of the chip and its uses for new processing power and machine learning specializations. The Dojo supercomputer has been built by the ground up from Tesla, and it is expected to focus on pure machine learning, meaning it isn't backwards compatible with existing products on the market, but has been specifically designed for next-gen AI technology. With Dojo, Tesla is expected to finally be able to take full advantage of the extremely large database of real-world driving scenarios, which it's been accumulating through millions of vehicles for years now. There are also opportunities to grow revenue, and that's where it gets interesting for Tesla investors. Elon Musk disclosed earlier this year that Dojo is potentially significant, and according to him, the automaker's got the potential to become a sellable service that Tesla would offer to other companies, on the same way that Amazon Web Services offers web services, even though it started out as a bookstore. Musk also added that the Tesla supercomputer can be used to train car models faster and for less money. You see, Tesla plans to use the computers to train machine learning models for its FSD software, which means that Tesla consumers themselves will experience the benefits of the increasingly large data sets. Even Morgan Stanley recently predicted that Dojo could represent a next step when it comes to the changes in market perception of Tesla, and the car company could leverage its unique position as a leader in both hardware and software to create a powerful AI platform that could rival the likes of Amazon, Microsoft, and Meta.
Because Tesla is still so dominant in the U.S., we're at a point where the EVs that do the most volume are largely qualifying at the moment. But I think the fact that those raw material requirements that kick in next year and then escalate in the years that follow, that's really where we're going to see even more of a sort of level of screws put on the industry. But I think the other car maker that I think is particularly well positioned, I'll call out to General Motors. I think the fact that they have a localized supply chain for batteries, they have a joint venture with a Korean battery supplier. We're seeing more and more of those partnerships. Ford following suit, Stellantis, the maker of Jeep, and Chrysler. Similar deal where they're setting up battery plants in North America and sort of on and on. But those projects, I would say, are much further behind where we have Tesla, which for years has been making batteries out in Nevada with Panasonic, and GM, which has a partnership with LG in U.S.
Hey, Craig, I think the narrative out there, just kind of the bigger picture on EVs right now is, maybe demand isn't as high as we all thought at one point. We've got, the big auto manufacturers pulling back, like Ford, for example. Loss is still big. What's your understanding when you talk to your sources as to how people are thinking about the ultimate demand for EVs over the next 1 to 3 to 5 years?
I think, perversely, it was a challenge that, for a time, business was too good. The fact that, for a while there, so many companies, actually had back orders. Tesla in particular, had demand issues as opposed to a supply issue. That, really sort of caused this, unsustainable, jacking up of prices. The fact that that has had to come down, I would say, more dramatically than we've seen for the rest of the industry has had all sorts of, unintended consequences. When you, so dramatically bring down prices on the new side, the used side is of the equation. The used vehicles really lose their value. And the fact that I think EVs maybe have some sort of, particular challenges with, maintaining their value. When you think about a used gas car, you don't worry about, the engine holding up. You maybe have, relatively more concern, rightfully or not, as to whether or not the battery is going to hold up. And so what we're seeing is that really come into play in terms of total cost of ownership. I think that's one of the things that we've really paid close attention to lately. I think when we step back, the fact that EVs is sort of, the way forward, particularly in terms of, where the regulators want to see this industry go. I think we've seen that China is able to make this work. We've seen that Europe is much further along in this transition. I think the question for the U.S. is whether we can sort of, get Americans who tend to like bigger vehicles to come around to electric vehicles. I think that also adds some complications to the mix as well.
Dan Ives has always pressed the importance of Tesla's battery business. Remember Tesla's Master Plan Part 3? It's all about the energy ecosystem. Tesla's not just about cars now. The car company's focusing on solar roofs, power walls, and homes. Basically a one-stop shop for going green, and we think this integrated approach could be a game changer. Imagine this, powering your Tesla with the sunshine beaming down on your roof. It's pretty cool, right? Tesla's battery business is a key component of its vision to accelerate the world's transition to sustainable energy. And the automaker not only produces electric vehicles, but also battery energy storage systems for homes, businesses, and utilities, as well as solar panels and solar roofs for renewable generation. Let's also add that there are a couple of reasons as to why Tesla's battery business is going to be a huge revenue stream for the company. And for one, it's that Tesla has a competitive advantage in battery technology, and it's been investing heavily in research and development, manufacturing, and recycling of batteries. Tesla's partnered up with Panasonic and other suppliers to make its own batteries at its gigafactories, where it aims to expand and achieve economies of scale and lower costs. It's also got a subsidiary called Redwood Materials, which is developing a circular supply chain for batteries by recovering valuable materials from old batteries and then using them to make new ones. Already, Tesla has a growing demand for its battery products, both in terms of its own electric vehicle production and external customers. Its EVs are powered by proprietary battery packs which offer high performance, range, and efficiency. Factors like this are critical for every Tesla investor to remember, as they form the very basis of Tesla's foundation. No doubt there are still challenges. Competition in the EV market is heating up, and keeping production running smoothly can be tricky, but we think Tesla's got a head start and a passionate fan base. This company is constantly innovating and pushing the boundaries of what's possible, and so, with increased production and holistic energy vision, the advancements in self-driving tech, Tesla might actually be on the cusp of greatness, ushering investors into their money-making era. But what do you think? Could Dan Ives be right about Tesla? Let us know down below, and don't forget to tell us what your valuation of Tesla is. And if you want to know more about what Tesla's been up to over the last few days, go ahead and click on this next video on your screen. See you there!